another edition of Strategic Moves with Lou. I'm Mike Hendren, your host. I'm a licensed real estate agent here in Wichita Falls, Texas with Strategic Realty. And seated over here next to me, or next to our guest actually today, is Lou Itala. She is the owner-broker of Strategic Realty here in Wichita Falls.
Hey.
We do have a special guest with us today, Lou. Why don't you introduce her?
We do. We have Cindy David with Caliber
Home
Loans. And she is going to talk to us about the different products that Caliber Home Loans offers. Do they have an actual branch, a physical branch here?
We do, and it is about to be opened up. It's been under construction for a couple of months, and they're finishing it up now. So I'm hoping
you're going to have an open house and everything.
I will. Yes, I will be having an open house, ribbon cutting, and all of that once we're get the signage and all of that in. It's in Century Plaza. So
okay.
Kind of behind the Maplewood.
Yes. Okay.
Facing the courtyard there. So it's a great location, close to all the title companies.
Sweet. That's going to be a good thing, because that's the hardest part about being in the lending business, obviously, you know, is having that physical location where clients can meet you, so you're not like an online provider.
I know, right. Yeah, we want a place where they can come in, drop off their documents or whatever they need to do. So.
Fantastic. So tell us a little bit about yourself, like what you've been up to. I know that you used to work with.
Well, I've been in mortgage lending for a long time prior to going to work at the title company. I was at Landmark Title for 20 years. Yes, I was there for 20 years and decided to get back in the mortgage lending business. So I've been back in it now for about 3 years.
Oh,
and I joined Caliber in the end of May this year. So it's been fun and learning about all the new products. There's constantly different ones being rolled out.
Yeah, and you have some exciting ones that we can talk about today. You guys do FHA, VA, and the conventional
all the normal
third party.
Yes, and the bond loans, we do T-Shack and Seth and USDA and all of those in addition to the standard
and
products.
Those qualifications. I remember T-Shack was mainly for firemen, teachers, nurses. Is that...
No. It's for anyone.
Anyone can get a T-Shack loan, T-Shack down payment assistance, or is it down payment assistance?
It's down payment assistance, and there's like a 3%, a 4%, or a 5% assistance, depending on how much you need in the product that you're doing. Because say if it's conventional, then you might need 5%. Assistance, and the rates are different based on how much assistance that you need. The other thing about that, a lot of people think it is a first-time homebuyer program, and it's not. You do not have to be a first-time homebuyer. And the other good thing is...
You don't have to pay it back either.
If you've got two people, because there are income limitations on it, but if you've got two people on the loan, but you only need one of their incomes to qualify, that's fine. You just qualify them on that income, even though the other person works. So sometimes with the assistance,
the one of the good things about one of the benefits of two people being on a loan is that it includes both of their incomes. But as a married couple, if you do FHA, usually if you're only using one, you also have to include the debt of the second.
You do.
Okay, so that's where the drawback is. If you don't use their income, then your debt-to-income ratio is going to be higher because the debt is combined.
Because you still have to use, if you don't, you still got to use their debts. So that is something we look at, and that's one reason sometimes we'll put them in a conventional product. The only thing about that is their ratios and the guidelines are a little different on conventional.
Yeah.
So we just have to look at all the different aspects of it.
Whenever you get a client, you don't just go, oh, okay, you're going to do conventional. You kind of like try and qualify them for anything and everything that they're going to be getting.
Yeah, just based on their situation and their money and how much they want to put down and all of that. We try to look at the whole big picture and see what's the best product.
What's the minimum credit score for one of the down payment assistance programs?
620 currently.
For all of them, or just okay?
Well, no, actually, I'm wrong on that. On conventional, it's 640, and so then the FHA. Okay. And I will say this, I have done an assistance for VA because, as we know in this market right now, it's hard sometimes to get the seller to pay closing costs. Mm-hmm. And so they can get assistance and not have to put a down payment down because they're going VA, and they can use that assistance for their closing cost, say if the seller.
Okay.
So it's
know.
not strict. It is called the down payment assistance program, but it's not strictly just for the down payment.
Right,
They
you
can
could use
apply
it.
it towards whatever costs there are involved in this process. So
Right.
I've done a couple of these in the past, like the City Assistance Program and the T-Shack, and I think we did Seth on one of my clients, and it's fantastic because you can go to closing with literally zero down. Like
Right.
I've had a couple of clients that have actually gotten all of their earnest money back.
Right. Yeah, I have too.
Wow.
Yeah.
Interesting.
So like $1,500 if they put $1,500 down or whatever,
Yeah.
they'd get that check at closing.
Interesting.
So you could buy a house and make
Get
money.
money.
In the
or get your
conver-
money back. I
Yeah.
don't know about making money, but
in the conversation prior to starting today's taping of the show, I heard you talking a little bit about some of the challenges with self-employed folks. And I saw a story recently that said that thousands and thousands of new entrepreneurs were created in this country last year because of the pandemic. You had a lot of people that lost their jobs entirely. And rather than going back into the traditional workforce, they've gone off on their own, started their own businesses. So now they're entrepreneurs. But as a small business owner, as an independent contractor, what do you want to call yourself?
self-employed.
Self-employed.
Any self-employed person.
You face some challenges
Oh,
in
yeah.
getting approved for
Us
some
as
of
real
these
estate
loans.
agents struggle a lot with that. Like if we're trying to buy a home or
Yeah.
something like that, unless we have a big wad of cash, which,
Yeah.
doesn't always happen.
No, it doesn't.
We wind up having to get a little bit creative with our financing. Even
Yeah.
to buy my own house, I had to get a little bit creative. And I haven't been able to refinance it to take advantage of the lower interest rate
Right,
because my tax returns are not reflective of the income that I make.
Yeah.
I take a lot of expenses. I take all of them.
Right.
What, you mean you don't
And
look
you
like
want to-
Warren Buffett on paper? Come
no,
on.
no. And
Come
then
on.
I had a lot of rental properties too, so I always had like a negative
Uh-huh.
because of all the depreciation and everything.
Yeah. Well,
Um,
kind of walk us through some of that. What are some of the
Lenders don't
ways
like
that
it.
perhaps Caliber could assist someone who is self-employed? What are some of the things that you
products
can
that you
offer? The
might have.
products that would make sense for a self-employed individual.
Right. We've got several products that have just rolled out, actually, that are fantastic. You can be self-employed. Now, you still have to have been self-employed for 2 years. Some people run into the deal where maybe they've only been in business for a year.
Right.
And so on this product, you do have to have been self-employed for 2 years. But we can qualify you based on either 12 months bank statements or 24 months bank statements versus tax returns.
Okay.
Yeah, they don't want to see your tax return.
If we're going to qualify you on that, we do not want to see those tax returns because you cannot unsee them once you've seen them. So, we
Like so many other things in life, you can't unsee.
You can't unsee
yeah.
it.
Okay.
Yeah. So anyway, but it is a tremendous opportunity to help a lot of self-employed people because you do want to take all those write-offs. I mean, I get it.
Yeah, sure.
I mean, we have like a little small farming cattle thing, and we want to take tons of write-offs too. That's you want to get all the help you can with those taxes.
Sure.
So it is a great opportunity for people that are self-employed to either finance their home, refinance their home.
Yeah.
The rates are going to be a little bit higher, but not
Typically,
hugely.
like how much?
You're probably going to be looking at about 1% or so higher.
So right now the
At
interest
least.
rates are
Well,
know,
it varies
they're
on any
under
given
3
day.
still though, right? Or
Well,
like 3 and a quarter?
they've been inching up, and so they're coming up around 3 1/4, 3 1/8. It just a lot depends on the price, your credit score, and all of that comes into play on it.
So you might figure if the interest rate is 3 1/4, you might be 4 1/4
Right,
or 4 1/2,
right,
perhaps.
right.
But you're getting an opportunity that you wouldn't otherwise have.
That's true.
So sometimes, that's the
It
advantage. And
allows
once
you to buy.
Right, yeah. So,
Interesting.
What other limitations? I know it's based off their 12 months bank statements, and it's based on their credit score of.
And that's going to just depend on how much they're putting down.
Okay.
If you're going to be, if you got a credit score 720, 740, up in the 700s, you can probably put as little down as 10%.
Okay.
So it's going to be, a little bit more maybe than a regular conventional product, but the 10%. But the other side of it is you don't have mortgage insurance on it.
Right.
And so that
that's
saves
always
you
a
some
plus
money,
because
it's
actually considered conventional.
Uh-huh.
at
If
that
you
point?
put less than 20% down, you'll have the mortgage insurance on conventional.
Mm-hmm.
So on this particular product, it's in-house portfolio, you wouldn't have that. So
Oh, okay.
And this is also not only is it for investors that are buying their own home, but it's also for other investment properties.
right, there's another product for investors that are big into buying rental properties, where we could qualify you not on your bank statements or tax returns, but on the income or on your rental
income.
and your payment versus your payment. So that's another opportunity, but they have to be experienced investors.
Right.
It's not
That's
for the first time.
experienced
Yeah.
investors. So basically, they would take all of your rental income, all of your rental properties, and they would need what's called a rent roll. If you're in the business
Right.
of doing,
We're going
of
to know
taking-
what
yeah,
your
they're going to want to know what your rent roll looks like for 12 months or for a year.
Yes.
And then they're going to take your liabilities as far as like the mortgages that you do have on those properties into consideration as well. So as long as your income, and then what is the down payment on something like that?
Well, it's going to be probably 20%
20%
on the
most
investment.
investment properties. Okay.
Yes. And that's
And
pretty
that-
typical.
Yeah,
on
that
investment.
is pretty typical. I mean, I know a couple of commercial lenders in town that do 20% and sometimes even up to 25%.
Yeah, it's been changing during COVID. Sometimes they put overlays and stuff on it on those times.
And what about the interest rate on that one? Is it also going to be like
It's going to be more. I mean, it could even go up to
5%?
5% or so.
Okay.
Just depending on credit scores and all of that.
Yeah. Well, it all comes down to the risk involved. I mean,
Right.
Yeah, it's all
obviously,
risk-based.
with a deal like that, you're assuming a higher risk in those loans
Right.
than you would
Absolutely.
in many others. So,
But this is exciting because I don't know of any lenders that do these types of products in town. So this is a really good niche.
Yeah, I don't either. I haven't heard of anyone doing them around here.
Yeah.
So I
No.
do think it's a great product.
yeah. Is this kind of reflective of the change in the market in the last year? The fact that you're coming
I
into
think
the market
so.
and
We
doing
wanted
this?
yes, we wanted to branch out a little bit
Yeah.
because that is an underserved
Yeah.
population that
Yeah.
it's real tough, when you're self-employed, and so we wanted to provide an avenue for that.
Yeah. Well, and again, it was so many new entrepreneurs having been created in the last several months. I think there's going to be more of a demand for products like what you guys are offering.
It
here,
is
certainly.
so amazing the people that have jumped onto the online thing during COVID. Shopping online
Oh,
and everything,
gosh,
and
yeah.
everybody, and there's so many self-employed people now
Yeah.
that are selling stuff.
Yeah,
online.
because you got to make money somehow.
Right. Yeah.
Yeah. That's,
You have all that stuff in your garage that
Yeah.
you've been hoarding for years. Now's the time to get rid of it,
I'm about to unload some of my hoarding stuff. Yes, I am. Because I'm tired of not being able to use my garage for a garage.
I understand. I'm with you. I've got
did
too
that
many
a few-
clothes.
Oh, gosh. No, not me and clothes. I actually, when we were stationed in Okinawa, I actually had a craft store there.
Really?
And so we sold fabric and
wow.
Japanese things and books and stuff like that. And I had a website. And so I would ship everywhere in the United States when I was there for 4 years. And when I left Okinawa, I still had a lot of inventory. And I still have that
Oh, do you?
inventory. almost.
Oh, wow.
Is it? Yeah, it's been more than 10 years now.
Wow.
We got here in 2009. So
Well, now's a good time to go online and sell it.
Yeah.
too much work.
But who's got time?
I
huh?
know, right? I just don't have time for
Between
that.
everything else that we do.
Consign it to somebody.
I tried giving it to one of my assistants to take care of, and she just hasn't gotten around to it, I don't think.
Yeah.
So we'll
Yeah,
see. We'll see. Eventually,
Yes.
I'll get rid of all that because I got like reams and reams of fabric in my
Wow.
house. Oh, and it just takes up space.
There's a lot of people probably. There's a market for that, I bet.
I was actually considering just going ahead and donating it to somebody. I don't know. We'll see.
I thought she was going to say she's going to consider burning it.
Yeah.
No, well, no, he hasn't gotten that bad yet. In February of when was our little cold snap?
February.
The February.
February.
Yeah, in February, I might have considered it. If the electricity went out, there might have been some burnage.
Oh gosh. Yeah.
Wow. I hope we don't have another one of those this
Oh,
year.
no, that
No,
would be
let's hope not.
catastrophic. We can't do that again.
Let's hope not. Yeah, we talked a little bit about the interest rates and it kind of creeping up, and there seems to be a little bit of fear about where we're going to go next with interest rates. I mean, do you what do you think? I mean, I personally, I don't think we're going to see any sort of major spike in anything.
I don't think it's going to be major either. I mean, but I do think it'll just creep up some. But honestly, I think you think of the young people now. They haven't seen the rates like I saw them back in 1980. My first house, I think it was 16%.
Oh yeah.
And it wasn't because of credit. It was just
that was the
product.
That was
it was like a credit card debt for your home. You couldn't buy much house.
Yeah.
So really a normal interest rate was around 6. Kind of when we started going down, and that was kind of
that was the norm
and
after 09.
We've been so lucky to have these rates so low for so long. So.
I think I remember my first house that we bought in North Carolina when we were stationed there. Ours was almost 7%. It was like 6.49 or something like that.
And you thought you were robbing the bank.
I know, and that was back in 04, 03, somewhere around there.
Yeah, and there's probably still a lot of people in the local area here that have mortgages where they're still paying 5 and 6% because they got that loan back when that was the norm, and they've never refinanced. They've just kind of rocked along. What about on the refis? How do you guys operate on that?
We are still doing refinances. It slowed down some, because a lot of people did refinance. Back when they were
it jumped down,
that kind of thing. But I think there's a lot of people that just aren't sure of the process. That just it's like, well, I don't want to mess with it or whatever. Yeah. But it is worth it. To refinance, especially if your rates are down in 5 and 6 and 7.
I would suggest it in the 5 if there's more than 1% difference.
Especially if you're going to live there, forever, and not be selling it soon. That's another thing to think about.
Yeah, the only thing that I recommend to my clients is because I have some clients that they'll just refinance at least once a year, or whenever the interest rate goes down more than they go, oh, I could save so much money on my mortgage payment. Well, that's not the case all the time. So if you refinance more than once on your house, there's a danger that you're now going to be eaten into your equity. Right. Because every time you refinance, that those closing costs and everything get tacked on to the end of your loan. Mm-hmm. So you may not owe, like if you owe $90,000 and you refinance, yes, your interest rate's going to go down, your mortgage payment's going to go down, but now that house is worth $95,000. Like that mortgage, you have now $95,000 in it.
Yeah.
So that's one of the things that you really need to take care of, understanding that money isn't free. That interest rate bump or that savings that you're having on a regular monthly basis is not free.
And we talked about some of the rules and some of the things you need to, how you were qualified if you're a small business owner to qualify to purchase. Is it the same rules for refis, or is it a little different structure for the refis?
No, I mean, we can still do the refinances on that product if you're self-employed.
Okay.
So, and we can do purchase or refis.
Oh, okay, cool.
It's good to know.
It is good to know.
I might be calling you to refi mine. Because I'm still paying, I think, 4-point-something%. So I could probably save like 1 point by refinancing my house. My biggest thing is that I bought my house with Fidelity back when they were Fidelity, and they didn't do the escrow of the taxes and insurance. So that's just been a pain in the booty for the last 10 years.
I know. I used to have mine on there, and I was like, no, I need an escrow.
Yeah, exactly. I don't mind paying a little bit more monthly payment just so that I don't have to.
You don't have to worry about it.
Exactly. I love having the escrow because you don't have to think about it. It's just you're paying it every month, and a portion of that payment's going into that escrow account, and you don't have to worry about writing a check to the insurance company or to the county. It's done
the insurance comes out of my own personal bank account every month, so that's not a big deal. But the taxes always just like kills me. January time frame after we've already just spent thousands of dollars on Christmas, and then all of a sudden I got to turn around and put
this bill, and you're like, oh my gosh,
thousands of dollars towards taxes. And I think this year my taxes have gone up almost $1,000.
Oh, mine went up a lot too. Everybody's
maybe
did,
more.
I guess.
I've been scared to even look at it. I don't even.
Well, we've seen appraisals going up each year.
My neighborhood.
I mean, mine went up $27,000 in 2 years.
I'm telling you, I haven't even wanted to look at it because I live in Midwestern Farms, and those neighborhoods over there, those houses over there have my next door, the ones across the street from me sold for like $180,000 this year, or
Yeah.
this last couple of years, and I'm just like, what?
Yeah.
Oh, I know.
I was struggling paying $125 for mine. I thought that was overpaid.
Yeah.
But
Yeah.
you know,
Well, and now we see houses selling for 125 that would have been
$50,000,
50, 60 grand, 4 or 5 years ago, would have been a lot less. I had one client that, they were in that neighborhood of sales price. I promise you, they didn't pay that much for it when they bought it. They
actually
did pretty
had
good.
several. I had one client sold several houses on one street on Elizabeth,
Mm-hmm.
and each one of those houses that we sold was over, I think it was $45,000. The first one was 55, the second one was like 35, and the third one was 45. But I can't remember any client of mine ever paying more than $20,000 for a house on Elizabeth.
Oh, yeah. Yeah. Well, so many of those investment properties were bought back before any of this run up in prices started.
Which another discussion, how are they doing? How is Caliber Loans doing with the foreclosures and the forbearance?
Yeah.
We really have been doing really well. We haven't had a ton of it. We really haven't.
And that's what I'm hearing from a lot of banks.
It's not as bad as what I think people thought it was going to be.
Because a lot of people are
Right.
taking advantage of the forbearance, more modifications.
Right. Yeah. So it's not too bad. I mean, I don't think we're going to see as a big a bubble as what people thought,
Yeah, because that's
I'm
one of
hoping
the things
not.
that a lot of these investors are worried about. And next week we're going to have an investor on our board, and that's one of the things that they're worried about is that this market is not going to be able to sustain the hike of market prices once the REOs come onto the market, and they start. Yeah. I mean, it's gonna have an effect on our market regardless.
It will.
Yeah.
But I just don't see that it's going to be flooding the market.
I don't either, but I may be wrong. It's hard to.
I think we just don't have as much of that here as you would have in a larger metropolitan area, or like, well, you take what happened back in 08, when we had the big bubble with the subprime mortgages. That problem was a lot worse in places like California, for example, than it ever was in Texas. But in Texas, you had a bigger problem in Houston or San Antonio than you had in Wichita Falls. I mean, we don't have as much of that here, do we?
I don't think
anywhere
we
close
do.
to that.
Yeah,
I think in general, our market here is pretty stable,
Yeah.
even with the REOs, because generally you have about maybe 1 to 10% in the market that are going to be REOs. And obviously, in the last 2 years, we've seen nothing.
Yeah.
Has it slowed down with the number of contracts that are being submitted on every property when it hits the market? I mean, for a while they said there were so many contracts.
Yeah.
10,
that
15
you were
contracts
fighting.
or whatever.
Yeah. Has that slowed a little?
Well, I think it's more dependent on the house itself now.
Yeah.
So if it's in the price range of $50 to $200,000, those are the price ranges that are going to still getting multiple offers. But it also is dependent on the house itself, because sometimes some of these houses are stinky. Yeah. No updates. Even the ones that are not having a lot of updates are still getting multiple offers, which kind of blows my mind a little bit.
People are maybe willing to put in a little bit of money, fix them up, I guess, or
There's a lot of that.
yeah.
Yeah. There's a lot of that.
Still a lot of that. And
We got a lot
I
of
think
relocations still. A lot of people that are coming from out of town, investors that are buying up these properties. One thing I did read in the news is that Zillow has decided that they're not going to do flips anymore.
I saw that,
Really?
and you know what? I predicted this was going to happen.
Because they just can't. They can't seem to judge the market values as well as they should.
I was having a conversation with another agent, and this was several months ago, and we were talking about this very thing because he was all up in arms about companies like Zillow getting into this and
Into the real estate market.
and really hurting the rest of us. And I said, just hold on. I said, I think they're going to find they're in over their heads. They're going to find that this is a much more difficult area to navigate than what they've planned on. I said, just hold on. Don't pass out on me yet. This is going to be okay.
Well,
And sure
in the
enough, and
summer,
then
there was a lot of Zillow property. A lot of
Yeah.
properties were getting sold to Zillow. Like
Yes.
Zillow
Really?
was literally buying these houses.
yes,
Oh,
Cash,
really?
sight, and
Yes.
well,
Oh,
they-
wow. I
yeah.
didn't know
So
that.
so they were buying these houses, and then they would go in there and fix it up a little bit,
hmm
update a few things, give it a paint job, and then turn around and try and get $70,000 more for it.
Oh, wow.
yeah, and it just didn't work out. And they found out it was actually going to hurt them. It was actually going to hurt them long term doing this. They was going to it was going to cost them not just market value, but market shares too. They were going to lose on this. So my prediction came true. They decided, yeah, it's not worth it. You know, let somebody else have this job.
Well, it's like like you as a real estate agent, we do have to diversify a little bit. You know, I mean,
Sure.
when we get into real estate, we do a little bit of this and a little bit of that to
Yeah,
see
sure.
what is our favorite thing to do. You know, we have to experience it a little bit. So I think that's what Zillow is
Sure.
experiencing right
Sure.
now, is that they're just, even though they've been a website,
Yeah.
now they're really wanting to do real estate.
Yeah.
And in order to do that, they got to try a few things before they decide how they're going to be.
Well, and just like any independent real estate agent, I think you have to be careful. You get too far out of your comfort zone sometimes, and you end up stepping on your own toes. And
Yeah.
so you,
well, there's some people
know.
out there that, even though they're good real estate agents, they shouldn't be investors,
yeah,
or
right.
vice versa.
Right,
you know?
right. Yeah, you know, you got to figure out what's in your wheelhouse.
Right.
What are you good at? What can you not just make money at, but what are you good at? And then stay in your wheelhouse. You know,
Stay in your lane. Yeah, you got to stay in your lane,
stay
man.
in your lane. You know, and some it usually works out better for you. You know, when you figure out exactly where your specialty lies, then you do better.
That's what I did whenever I first got into real estate.
Yeah.
I learned really quick that I was good at the REOs, at the repos and the bank owned properties, because I don't know, I was good at it.
Yeah.
I enjoyed that work, even though it's harder to do in some aspects. It involves a lot more legwork, and you have to go over there and inspect the properties on a regular basis. For some reason, I just enjoyed that part of the work better than dealing with people. Maybe that's what it is. I just don't like people. I don't know if I should say that on the radio.
Well, I know. There's
It was-
moments, right?
I deal with houses. I'm pretty good with houses.
I think it would be hard as an agent to go in all of these homes and not want to move all the time.
Yeah.
Not want to, buy another house or whatever, because you see
Oh.
so many. I
don't
think
know.
that would be hard.
Once
I-
you've moved
once
2 or
you
3
know-
times, you
Yeah,
get
you
tired
learn
of it.
quick.
tired of moving.
Yeah.
Yeah.
When I first got into real estate, I bought my house.
Yeah.
And I'll know, I even though the property is probably twice what it was worth when I bought it, now I go back and forth about whether I want to sell it, and then I just think about the moving, and I'm like, nah.
Yeah.
Well, we live in the country, and when you live in the country and you've got land, you tend to spread out.
Yeah.
So for me to
Yeah.
move right now, I can't even imagine moving.
Yeah.
So
I'm prior military. I'm a prior military spouse.
Okay.
So for 20 years we were moved around,
moving a lot.
and we didn't need to do the moving process. And when I moved here, we got out of the military, and
Yeah.
I moved myself that last time. Never again.
It's not fun.
Oh, I'd totally forgotten what it was like. It took me like 2 weeks to move. Meanwhile, the military comes in and they do it in a few
Yeah.
days.
Yeah.
That just doesn't happen. when
I've got
you're
a
doing
family
it on
member
your
that
own.
they're military, and they're getting moved right now from Texas to Kansas. And of course, the military
Wow.
is handling all of
Yeah.
this for them, and they seem a little upset about some things. And I'm like, calm down. You're not having to load boxes in a truck. Somebody else is doing it for you. Relax. You're in good shape here, But anyway, well, is there anything we haven't covered with you that we should? We got a minute or so left here.
Oh, I don't think so. I mean, we've constantly got new products coming out, and I've got one that I'm working on right now, learning a little bit about it. So when I get all the details, I'll let you know. It's a renovation loan type
Nice.
deal.
Yay!
And so I think
We
that's
need
going to
some of
be
those.
kind of exciting for
This is
people.
exciting.
Yeah.
Okay, so
I'm gonna
have
find out more about that, and then I'll let y'all know more details on it. But that is a product I think we need. It's going to be based on like you're buying, and you can go the way I understand it, FHA, VA, or conventional, but you could get, maybe you need 15,000. You
Gotcha.
don't need huge amount of money, but you want to pay
and they put it into like an
move forward.
escrow account, and then
Yeah.
you get draws and stuff as you go along.
Right.
Oh,
And so-
perfect.
And it would be you're not going to close twice. Or have two loans.
Or
It's
like a
all
bridge
in
loan
one.
and then a refi.
Yes.
Yeah.
Okay.
Oh,
So,
cool.
Anyway, so that's something that's coming up. So.
All right. Well, tell people
Awesome.
exactly
We
how to
need
get in
this.
touch with you, how they contact you.
Okay, well, I work off my cell phone, so it's 940-781-9396. You can always get me on
Awesome.
that. If I miss the call, I'll definitely call you back. But
Okay.
that's the best way. I mean, even though I'm going to have an office, I will have an office phone, but I prefer just to get my cell
Right.
phone
Well, it's
because
just
you can,
easier
you
that
know, you never
way.
know where you're out and about or whatever, and so you can. Don't
And
miss
what's your
messages.
address again?
It's 20. Oh gosh, Century Plaza. I have
Century
to look.
Plaza.
Yes, Century
Is it
Plaza.
on the front
It's on the
portion?
front portion. There's Regeneration on one side and the Maplewood, and I'm right in the middle, towards the back. There's a restaurant there, Osmos or something. I think. Do you know where
yeah,
that is?
it used to be
Used to
Fuzzy's
Fuzzy's
Taco.
Yeah,
Tacos.
it's Fazman's
Yeah.
now,
Oh,
yeah.
okay.
So
Okay.
I'm right back there, and I face the courtyard.
Oh,
and,
cool.
So I don't have the sign up yet, but it's coming soon.
That's
All right.
exciting.
All
All
right.
right.
Wonderful.
I'm happy for you.
Thank you.
Well, we look
Thank-
forward to
thank
having you back soon. If you want to reach us, strategicrealty.net is the website. 940
Oh, that's my phone number. 689.
7900.
Yeah, we'll get our stuff together here.
And again, strategicrealty.net. Until next time, we'll see you down the road. Take care, everybody.